Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. Happy Sunday, happy Sunday, happy Sunday. Been working, was no rest for the weary. Good afternoon, Patrick. Oh no, Martinez not good for me. Texans lost again. I was taping the Bears game, and I didn't want to know who won. I've been working. I guess now I know who won because the Bears were playing the Texans. Oh, well, so much for that. Hey, good afternoon to you, Martinez. I've been avoiding getting the score all afternoon. It's okay. I just think that's sort of funny because, I mean, any other week, Texans lose. Why would it bother me? It doesn't matter. Oh, it's just a football game. It's not like the markets are not at a critical juncture. What's more important, the markets or football? Well, I'm live streaming and it's football Sunday, so that should answer your question. By the way, I did put up happy Sunday, happy Sunday, happy Sunday after 22. I did put up the sector overview. So if you're looking for stuff, there's not nowhere really to hide if you're bullish, but I did put up my thoughts of what sectors I will be focusing on should we get a bounce. It's okay, Martinez. Again, you didn't know, and it's okay. Just hey, it's sort of funny. So, what was the final? You might as well tell me the final score, Martinez. You might as well just put it in here. Give me the Bears Texans scores. Hello, George. Getting ready to go bungee jumping with the market. Oh, well, we should go bungee jumping with the market. Hey, Waka Waka. I'll get to my what is everybody gonna spoil something today? Oh, we could be in for a big drop. Literally, I spent a lot of time this weekend looking at stuff and recapping and going through stuff, and I'll give you my thoughts. All right, 23-20. So did they lose by a field goal? Or I don't know. All right. Or did the Bears win by a field goal? So bad news in Asia. I still am catching up on some. I know the pound is getting hammered. We should probably see some more downside with the euro. We should see some interesting stuff in the currency markets. The internals on the markets suck. Suck. And when we see the kind of action we did on Friday, and Friday was not a capitulation, I might as well just put it out there now. Friday was not a capitulation. Didn't meet any of my stats for capitulation. Didn't meet any of the, and I'm not just talking, well, capitulations can happen on different time frames. This would have not been a long term capitulation. This would have been more a short to medium term capitulation. We did not hit I double checked everything. We did not hit the rules for capitulation. Double checked all the internal stats. Double checked everything. You know, when I talk about internal stats, it's the stuff behind the numbers, like volume, tick, trim, advanced decliners, market breadth, liquidity at different key strikes. What else? We have a breadth of key levels in the S&P futures and the NASDAQ futures. There's a lot that goes into this. And what is not good is when we see these numbers, and I hate to put it this way, either we could just plow down. We could just literally go into a capitulation move. We could, and I don't throw around crash term lightly, but we could have a severe market downdraft. We're going to be between two extremes. Either, and we're going to know very shortly, like meaning beginning of the week shortly, severe downdraft, or we put in a non-capitulation capitulation bottom, which would normally be a shorter term bottom than a capitulation bottom. So a capitulation bottom would be more short to midtermish. A non-capitulation bottom would be more of a short-term bottom. I hope that makes sense. This is not a place where we're going to generally, again, anything can happen. Nothing's 100%, but generally, to the very, very strong probabilities, we're going to have a snap one way or the other at the beginning of the week. It's not just going to hang out here, be a little lackadaisical market. We're either going to snap one way or the other. That's what. So we're going to have a volatility event. Volatility meaning that doesn't mean that necessarily the VIX is going to spike. Yes, if we get a volatility event to the downside, the VIX should spike. And we'll take a look at that. But a volatility event to the upside, the VIX will generally pull back. But we should be set up for very high probabilities we're going to have a volatility event. That's the best way. That's the best way to put it. Got to have at least a day bounce. If we generally get a bounce, we should continue for a few days based off of this price. Why do you think we're going to bounce short term? I said we're either going to go one or two ways. It's either going to be we're going to start getting a bounce, probably pretty aggressive short-term rally, or we're going to get a significant sell-off, which could lead to a capitulation move. Friday was pretty orderly, but there was a lot of the market breadth did stink, and the internals stink. They stink. It's like sort of like you painted a house, a wooden house, but there was a lot of rotten wood, and you painted over it. So driving by it or walking up, you say, "Oh, they've got a fresh paint job. Doesn't that look nice?" But you start looking at the wood closely, it's rotting. You're welcome, Brian. Thank you for being here. Need to see a 7% plus drop within a few hours, and that we could. I mean, again, I don't throw around. I hate people say crash, and I don't know whether it would be a crash. I mean, a crash is generally even more than 7%, but a significant volatility event could be a 5, 6, 7% event. Hey, Amadeus. Was June 9/13? No, it was not. It did not qualify. We have not had a capitulation. And we'll get to that. Let me just get to some stuff real quick. By the way, if you are, we're getting more and more people. Subscriber count still going up. Subscriber count still. So if you're on the fence, give us the benefit of the doubt. Consider subscribing, ringing that bell, and hitting the like button. I think we provide we're not about hype. We're not about pumping to sell stuff. We're about literally probabilities and the best we can do to analyze the market. I've been doing this since 1992. I look younger than I am. So, and Bob is like within a year of starting. He's actually older than me, but started just slightly later than me, I think. He's got like half a year less experience, but that doesn't matter. I mean, combined, we're looking at 60, that sounds really bad. 60 years between myself and Bob. That's not to mention other people we deal with and interact with. 60 years of market experience, that's a lot. We've been around this for a while. So, let's just quickly review the week so we're not caught off guard. Tomorrow, we got Fed Speaks. Fed Speaks. I'm not going to list them all. You got a week of Fed Speaks coming up. You even had, who was it, Bostic today on one of the morning shows, reiterating they need a slowdown, blah, 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 blah. You have Dallas Fed Manufacturing Index, minor tomorrow. Again, more significant is durable goods on Tuesday. More significant is that. See if that's still in contraction or if the X transports goes into contraction. House price, Bullard, yeah, we got more of that. Consumer confidence is more significant on Tuesday. So keep that in mind. Consumer confidence on Tuesday. Fed manufacturing and Dallas Fed services, those are going to be a little more low importance. More Fed speak Wednesday. Again, crude numbers, but not a lot there. Now, Thursday, a lot of people are saying it's GDP Thursday. This is the rear view looking. It should still stay below zero. This is the final revision. Remember, we have the primary numbers, and then we got a couple of revisions. This is the final revision. This should, unless there's some, I think that would be some potential monkey business, we should still see 2 quarters of negative growth, which really doesn't mean anything because it doesn't. It should mean something that still think that people think that is a recession indicator. It's just to me that I think we're still going into the recession. I don't think we're there yet. I think we're really close though. So that's not as major as people make it out. What will be more major is the preliminary third quarter numbers. Now, what is significant is still you got some more the PCE prices, but those are still backwards looking because those are for Q2. But we'll get the final numbers. Okay, so the PCE, remember the Fed loves the PCE. Then we got more Fed speaks. Now, this is more significant. Friday, we got core PCE and regular PCE for August. Again, still backwards looking, just like the CPI numbers were backwards looking, but this is still favored by the Fed. So that's going to be pretty key. And you got personal income and personal spending to show where the consumer is. So Friday is going to be the bigger day. If I had to rank it, Friday, then Thursday would be the biggest day. And then final September consumer sentiment. We had the preliminary last week. This is the final. Still, we should start contracting more. This is still summer bounce numbers. Kids still going back to school. Summer bounce. Gas prices still low. Also, something to keep in mind is just keep in mind on that hurricane that's marching towards Florida and the Gulf. The Gulf especially. All right, S&P, there's nowhere to hide, really. Some area to hide in healthcare, so that's one of the sectors I am paying attention to. Oil still taking the shorts, but I'm looking, especially if this hurricane starts edging more towards the Gulf, we'll be watching oil very closely. Still, the next meeting is until November 2nd, but 75 basis points favored at 73% roughly. We're still deep negative gamma territory. Remember, right now, we don't have options expiration in the third week of October. However, we do have a lot of gamma from the put side around that 3,700 strike. So if we start getting momentum back above 3,700, we could see some interesting dynamics above there. But we are still in negative gamma, and that does favor both sell-offs and rallies. Now, the peak negative gamma is getting around this 35, 35.50. But we could still see accelerating gamma to the downside through 35.50, 3600. Fear and greed, we're getting this extreme fear. This is just something everybody can track. Go to CNN Business, look up their fear and greed index. When you start getting down to extreme fear, you start watching. You don't just buy because you could get the bounce. I mean, we could definitely go into more extreme fear, especially if we get some kind of sell-off move. But once we get into this area, why I'm showing this for people is something you could track for free. Even if I'm not around, you start getting into extreme fear, you start watching for those more short-term bottoms. Current market valuation dipping. I mean, we got a wide range here. I look at the minor models. The yield curve still overvalued. I don't even think the fairly valued Buffett indicator. Fairly valued is stupid because this is going to go to undervalued before it's done. P to E, fairly valued, no. No, we're going to go to undervalued. But I like to look at these lines. I don't need to go through all that right now. All right. I'll get to more questions in a second. Oh, bigger Bed Bath & Beyond. Thursday's critical. Micron for all those semiconductor traders. I put my thoughts on semis in the sector overview. For all those boondockers, we got Cracker Barrel on Tuesday. Let's see. It's not a big earnings week. Just wanted to point out a couple things. All right, what now? Why did I get sort of sidetracked on there? Was June 9/13 a capitulation? No, this was not a capitulation. This was not a capitulation. This was not a capitulation. These were not capitulation moves. We have not officially on this whole sell-off had a capitulation move. This was closer back in January. The two closest were January and February. The two closest ones. And Friday was definitely not capitulation. Let me get to some more stuff. VIX would be in mid-4. Let's just peek at the VIX too, because still, I'm going to put up the weekly. VIX was definitely not a capitulation move. I generally start watching for them. I start watching for more significant bottoms when we do spike above 35 at a minimum. We have not done that. 34.50, 35 area. It's all based off of, but you can start. So this isn't even a major signal. You can even just go back and eyeball it. Okay? This. See, there's that. There's back when I'm talking about January. You see that you have that key reversal and it's spiking up towards that 40 level. There's that close in February time. So, still, we're going to be watching for that. Also, we did close above the 62.5. We should still see that 87.5, which means we could. That's why I'm also focused on. We could see that spike, the spike before we get that little bottoming move. The spike first. All right, where do we sit? A major drop. I don't know if we go 60 plus, but we could definitely see 50 plus if we went to a major, and that wouldn't be in one day generally. That would be if we had a multi-day massive sell-off. Typically, no. Let's say we push down tomorrow. It doesn't mean we have to have a capitulation move. If we have a sell-off tomorrow and it continues orderly, and going into Tuesday, Wednesday with cycles at the low, it could set up for a capitulation. Capitulations, it's until you're in it, you can't. You can predict the probabilities that hey, we're at higher because of your internals, but you can't predict the exact time of a capitulation. It's something that you could generally start to see it, especially when you get that push down where people throw in the towels and then you get the massive buying spree. We have not seen this. We saw some afternoon covering on Friday, but nothing to the, and people still aren't throwing in the towels. We're still not seeing that. Got too many people still buying the dip. Now, what's interesting, there will be a ton of stops below this June low. That's why it would have been better for the bulls had the markets, especially the S&P and NASDAQ, taken out the June lows on Friday and then reversed. That would have been a more powerful bottoming signal. If you get the rip your face off rally, we are at cycle bottoms on the daily and the weekly. This can still head lower. We had the little hump in there. We're in deeply oversold condition. It can get more oversold. A confirmed bounce, at least short-term buy, would be a close above Friday's high. A front run, should we start getting buying pressure tomorrow and no big flush out move, I will be watching single bar harmonics. Single bar harmonics. 37.21, 37.37. I start getting a move, especially about now. This assumes we don't make new lows overnight. We make new lows overnight, we'll have to revisit it tomorrow. If we hold the lows overnight, The key area, besides possibly coming back and making a double bottom pattern, you are into a clear path move on the 4 hour. Remember, clear path moves, go fine tune it on the 1 hour. Look, pausing area. What's that? 50% harmonic. So that's a target area between the 50 and the 62.5. You see a spike high up to 62.5 area. But what happens if we start rallying up and I start getting key closes above 62.5? Into a continued clear path move, that can be a front run. It's actually not as powerful as a daily, but given these conditions, can be a front run area. Now, if we come back down, make a double bottom, we'd also have a different pattern. If we come down, make new lows, the levels I just listed are off the table. I can't predict what's going to happen tonight, but I am watching for at least somewhat of a pullback. We start taking out Friday's lows. Based off the little short-term levels, 36.25, 35.91, then 35.50. Keep in mind, this is a good time to revisit this. Weekly basis. The weekly 50 EMA, which actually this would be a target for key bounce support, doesn't mean it has to hold, 36.20. That's the monthly. The weekly, I'm watching the 200. The weekly 200 is very key. 35.91, 35.84, right below that 35.56. 35.56 is where I'd be watching for a spike down. Should we go into sell mode overnight and tomorrow? I'd be watching 35.91, 35.85 on a closing basis. We're going into some key support areas. That could also possibly set up for a divergence on a higher time frame with weekly cycles being at the bottom. So those are the two major areas I'm focusing on if we get a flush out move tomorrow. Then the next key level is 35.56. Saw the question for the spiders. Will the SPY reach 375 on Monday? You got it. The better question is, what are the probabilities? 375 on Monday, we'd have to get the roar of the bottoming rally. I'd be more interested, yes, if we got the bottoming major rally. I would not be that would not be a bet I'd be making unless we got major intraday momentum for that much of a move. Now, do your gap harmonics. You start getting above 373. This is assuming we're not making a new low tomorrow morning. 370.13 is your key level I'd be watching for a close above. And that would be at least a 15-minute close, preferably an hour close. And then I wouldn't be targeting 375. I'd be targeting 374. But before that, depending on the amount of movement, I'd be targeting 372.86 and then 374.23. Those are your key upsides, and I would only be targeting above that 370.13. That's assuming we don't come back down, make another bottoming pattern like a potential double bottom, then those levels would change. So that's what I key off of to the upside. We've already hit that key support zone. Does this mean that this has to hold? No. Remember, close below 62.5. Only the probability is only that we could get a bounce between the 87 and 100. Does not guarantee a bounce. This is the first area we start watching for a bounce. We could easily go to new lows. Easily. Your shorter term levels, I'd be utilizing 360.69, 360.04 to 360.69, then 356.79. I'd use those, and this is a great time to use reverse harmonics. And if a bigger sell-off happens, 352, but I'm doubting that. I'd really be using the 356 and 360 areas. That's just tying in your S&P and the SPY. So I gave you the more of a bottoming. If we start getting that rally mode tomorrow, the Friday's lows hold, or we get a little push down and then major rally mode. I gave you a 62.5. The next thing I'd be focused on, and this doesn't have to happen on Monday, but it's more powerful if it happens on Monday, would be the close above that high, or it could happen on Tuesday. The first area that we'd be watching is the daily rotation zone, and I've also have the retracements on here. Should we be putting in a bottom where the low holds? Key area I'd be watching for a multi-day bounce is back to 39.03 to 39.10. Happy Sunday, Daniel. Okay, George, you're making a very limited a market analysis based off of looking at 2008. When the pound goes down, the pound has to go down. When you're saying the pound goes down, I was citing the pound was going down against the dollar. Remember, the banks are opening up shortly. This is pre-bank stuff. The banks are opening up shortly. So we don't have official, but if I'm citing the pound goes down, I am citing it against the dollar. But the pound could go down against the euro. The pound could go down against the yen. The pound could go down against the Canadian dollar, the Aussie dollar. That's a good question. When I'm citing it, unless I specifically give another currency pair, I'm referencing it versus the dollar, the US dollar. But remember, currencies all have exchange rates versus other currencies. And then you, as Waka Waka says, you have your major and minor pairs. Your major pairs, again, would be against the dollar. Another major pair is against the euro. All right. A minor pair would be like the pound versus the Canadian dollar, the pound versus the Australian dollar. It's not only looking at the price action, George. It's looking at, you got to have internals. There's a lot that goes on into a capitulation move. You just can't look at a bar. You can generally somewhat guess based off of, if you look at the VIX and the bar, you can guess, you can get close. But it's still, the way we define capitulation, the way I define it specifically, is based off a specific set of criteria, which is proprietary, because I'm not the only one that developed it. So a good sign is, though, you get a VIX spiking, just go above that 35 level with either you generally get a bounce back bar, or you get a bounce back pair between a capitulation days, meaning you get a big push down one day, you wipe out that big push down the next day. That would be a capitulation pair. The capitulation day would then be at the close. You didn't get the buyer stepping in. You generally got the buyer stepping in overnight in the overnight markets, and then it followed through the next day. Or a same day capitulation, you get the buyer stepping in before and a huge snapback rally. So Waka, yeah, I've looked at that with pre-markets with the European brokers, and it's an okay indicator. It's not a great indicator. I do think we will see some follow-through downside. Mike, as you know, I trade 100% options, so price action and timing is critical. You've been teaching us how to fish, but I'm a little fuzzy on fib extension. When do you fib extension? Can you show an example using the Qs? Sure, let me get through to NASDAQ. I'm longer term bearish. What are your lowest price levels on the Qs, and how do you arrive at those targets? Are trend lines used in, I watch for trend lines intersecting key levels. And by the way, even if you're trading the Qs options 22, I'm going to tell you something. You're going to get your stronger levels based off the futures. And if you can't trade futures, go to cash second. And I'm not asking you to trade futures. Use the futures for the levels and then look for the translation, because sometimes, remember, the Qs, yes, they are very heavily traded. However, the futures are traded 23 hours a day. And you get more key price action because you get the trading during the Asian and European sessions. It's why I don't just cover the spiders and the Qs. It's why I don't care if somebody doesn't trade. I know a lot of people only trade stocks or stock options. The reason I'm looking at futures is because you can get futures data so cheap now, there's no reason not to look at it. There's no reason not to do your analysis on it. So for the NASDAQ, we have the retracement extensions. We have the minor. Same thing, just for the point of completeness, I'm going to do the 1 day, just for what we're watching for overnight. Let me just get that out of the way. Let me do your retracements, and I'll do the other stuff. So if we didn't make new lows, the key level I'd be watching is 11,461. All right, especially on a closing basis. The other key areas, if we get above 11,461, at least 15-minute, would prefer an hour close, 11,553, then Friday's high. Close above Friday's high is that short-term buy pattern. A front run would be at least along the daily if it closes above that 62.5. Now, for your short term, your couple harmonics. For extensions, we're still going to utilize, I have on, let me put these back on. You can utilize your reverse. These would be reverse harmonics. Why? Because they're going backwards in time. Generally, when I'm watching for breakdowns, when we get between that 87.5 and 100, remember we're between the 87.5 here. If you want something more systematic, between the 87.5, remember we closed below the 62.5. If you get between the 87.5 to 100, which is what that 62.5 closed below, probability favors. I then, besides flipping, generally, for my own analysis, flip my harmonics now, because we could be watching for a bottom in here. And even if we make new lows, I'm going to drag this down. So I now watch for my key levels. And if you want the breakdown levels, the major breakdown levels, you're going to do the reverse harmonics. And how is that helpful? Because now, besides using past price action, if we break below recent lows, which would be the June lows, I have key natural order targets. Now, if we go in crash or major capitulation mode, you can watch for overshoots, but that gives me targets, intraday targets, or possibly daily targets. So utilizing the NASDAQ, 10,734 major, look at all these harmonics running down here. 10,362 to about 10,456. Now, based off this, and we can do the same thing on the Qs, just these are going to give us better levels. If you want to use forwards, you can use the most recent two swings. The most recent swing would be here. So what's this going to tell me? We start breaking below Friday's low, besides still using this key 1168 low from June. So I'm going to be watching 11. All right. 068 to 11,009. We break below that. Now I have a cluster. You see this? Two harmonics. So 10,789 to 10,734 area. Now keep in mind the reverse harmonics are slightly stronger. Why? This isn't a strong pausing bar yet, and reverse harmonics like this are generally stronger than forward harmonics off the most recent swing without a strong pausing bar. If you wanted to get a little nuts, which I wouldn't do here, you could go to this swing, but you're going to start getting too many lines on the screen. I like to keep it simple. Then your next major harmonics I'd be utilizing would be the next major harmonics would be these harmonics from the all-time high to this major swing low. And that's going to give us this other red line, which helps give us this next cluster. Yes, you could do multiple. You're going to get too many lines, and then you're going to forget which are the more major ones. That's why I try to keep it simpler. So that's the way you're going to utilize as I teach it. And those are for natural unfolding events in the market. When you get into major emotional moves, you're generally going to have overshoots to those levels. But it gives you an area to take profits and or move stops. And or watch especially with this many harmonics. Let's say we had a flush out move this week. I'd be watching for key closes around this level and for bottoming patterns. Does it have to happen right at this area? No, but this is going to be my key area. Does that make sense? So that's how you do it on there. Now on your cues, you can do the same thing. Let me take off some of these other levels. Your reverse harmonics would be here. Your most recent forward harmonics would be here. You see, I still have, we're back below that 87.5 to 100. So what am I going to do with my retracement harmonics? Again, if this is helping people, you can support the channel too via Buy Me a Coffee, Patreon, or Super Chats. If this is helping, this is key information to know. So we got to that area between the 87 and 100. I can reverse my retracement harmonics. I also have my reverse extension harmonics on and my forward harmonics. So we start breaking below Friday's lows, 268.28. A minor level to watch on the cues, because I don't know your position, would be this key close. Remember, closing prices are the most significant on markets that have a defined close. They're still significant because you're comparing things like on Bitcoin. Bitcoin never officially closes. So you're still comparing something when the bar closes, like you can say GMT, midnight to midnight every day, bar close. So you're still comparing one close in time, but it's not an official market close. It's still important, but it's not as important as markets with an official market close. All right? So, closing. Since the Qs have an official market close, the futures have an official market close. Even currency futures have an official market close. Now, if I'm trading currency futures, I use the CME close. If I'm trading cash FX, I use GMT. If my trading platform that I'm doing a live stream with doesn't support it, I will just use whatever the close they do because it will be consistent for the live streams. However, my preferred close is GMT for the cash forex market. For futures, it's the CME because you get position balancing going into those times, and then you're comparing those times against each other. By the way, the second most important thing is the open. It's not the high or low, it's the open. Why? Because it's defined time. For example, tonight's open is going to be an important key point. Why? Because the markets have been closed since Friday afternoon, and we have a defined, especially for the futures and for foreign exchange. Yes, you can get some pre-market levels based off European things, but the official, even for cash foreign exchange, there's a specific open time. So that's going to be an important level, a very important level, second to the close. Now, on the Qs, I would not ignore this key close from the 16th. You start breaking below there, 268.28 to 267.21 would be my next area. Below there, and I'm not just talking tomorrow, of course, I'm talking, and this again, we don't have the strongest pausing bar here, but this gives us a pausing bar area combined with the 16th lows. The next major area, since we do have major pausing, but we have a major top, swing high, we have a major swing low. This is a major level then, because we have two key, not only pausing bars, but swing pausing bars. So that's how you utilize it. Sorry for the people who already knew all this. I think it's important, and it's always good to recap it. To the upside, you can also use your gap harmonics. We'll just go through that tomorrow morning, depending on here, because I'm not going to make this on all-night live stream. So let me know if that makes sense, options. Josh, glad to hear from you again. Thank you for the overview. I'm trying to get people so you have more structure in your methodology. Because if you have a structure, you can then gauge it. You can come up with probabilities against it. If you have no structure, you can't come up with probabilities. Why? Because if your structure changes, then your probability calculations would naturally be flawed unless you're repeating the same setups to come up with your probabilities. That's why people who are constantly changing what they're doing, or, oh, well, this time it's slightly different. Well, then you can't really have probabilities, can you? Because your probabilities have to be based off of something, and if it's slightly different constantly, you can't have a set of probabilities. Good afternoon, Davey. You know, just depending on what time it is, George and Waka Waka, it could be both. Depending on what time you're looking for your closes. This crash will be the biggest crash in history. Are you saying we're going to crash? Right. Needed some of my iced tea there. I'm not seeing many comments, so either I lost a bunch of people or I bored a bunch of people. The Dow, look at the close though. We broke. This is why close. Look, we still closed above June lows on the futures. Very interesting right there. The Dow could not stay below the June lows on a closing basis. That is actually significant. So, yes, it broke to new lows, but it closed back above the June lows. That is a minorly, not majorly bullish pattern. That shows with the S&P not getting new lows, the NASDAQ not getting the new lows, the Russell not getting the new lows, the Dow getting new lows but closing above. That's why I can't get overly in a pattern. We're going to see very shortly. And even though the market internal sucked, they still did not have a bad close on Friday. I think you got a lot of complacency, though, because of that. I'm not going to go through all the analysis. We'll just do this overnight. But I mean, the Dow, boy, in order, yes, it would be bullish move. Should we close above the high on Monday? That would be a pretty strong reversal bar. Here were again, to keep all the charts at this point the same, there are your reverse harmonics, which is a stronger thing to use because this is a more minor pausing bar, but your forward harmonics, which doesn't give me a lot more. It's actually just getting to a point, or it gives me this. So 29.63, this would be very minor. More significant is 28,740, 28,500, 28,450 to 28,500. Should we get a big push down this week would be very key. Look at where we closed also. I have to touch on this. I didn't touch on something on the NASDAQ. Look at this, though, closing right at that weekly 200. This is key support. I didn't touch on this also. The weekly 200 on the NASDAQ is right here. That's where I'll be watching for a weekly close. Yes, this is some minor support, but I'm more focused on the June lows. But this will be when, by the time the end of the week comes, we'll see how we close in relative to the weekly 200. Coco, if you tuned in late, which you obviously did, you're going to have to rewatch the first 40 minutes. And you're getting a tardy slip. We're here. It just feels like the war room. Is this too advanced? It feels like the war room before launching the Battle of Midway. I'm trying to help people through a mindset of preparation. And you can do the same things with the stocks you trade. My thing is to try to teach a methodology and a structure. And this is not, for somebody who says you just put up a MACD and you master the markets, I'm sorry, it doesn't quite work that way. Some of this might be a little complex if you're newer, but it's literally, this can be taught. I've taught it to many people who have gone on to really become good traders and investors. Really good. Russell, let's just peek in at this. Again, I've already reversed stuff. The key levels for the Russell. Let me just get through this. We'll take a look tomorrow morning. I'm not going to beat this ad nauseum. But your key levels for the Russell would be 1591. And then if we have a major death week, 1542. I'll get to oil in a second. The DAX. This is where, let me get to this. By the way, we're using these key harmonics. I'm not getting in every reason why I'm using those longer term, but here's my area I'm watching overnight is 12,132 to 12,161. Should we push lower? And then key is 11,966. Notes. Potential bottoming pattern here. The notes actually were more of I don't have official capitulation stats on the notes, but that was more of a capitulation, possible flush out move on Friday. Yeah, let me just redraw these. For some reason, TradingView's bugging me right now with not keeping anchor points. You see, before you had the reverse harmonics. Now you can't use reverse harmonics. You have to use forward harmonics from this weaker anchor point, and you can use longer term harmonics. So if we did push lower again and broke Friday's lows, which would be pretty key, 110.16 would be the next major area. Oil. Remember, we got hurricane area closing in. I'm watching for anywhere with this area where major first target from the weekly double top and harmonic level 77 through about 77.50. Watching for that to be tagged. Now, with a hurricane, let's say you were playing this longer term with a hurricane closing in potentially in the Gulf, I'd be lowering stops. This is close enough at this point, given a hurricane's coming in. I'm not going to worry about 77.56 to low of 78.04. So essentially 50 cents for a stop reduction. This is not to take profits, but for a stop reduction, unless you were using this level on a shorter term. However, even for, let's say I was using this level on a shorter term for a downside profit-taking area, based off of a hurricane coming in, I wouldn't get nitpicky over a few cents. How much does a hurricane affect? It depends where the hurricane hits in the Gulf. Remember, more of the oil rigs and platforms are closer to the Louisiana area. Draw lines down from there rather than closer to Florida. You will get hurricane still remnants and tropical storm stuff, but if they don't have to shut down the whole platforms, it's going to be more minor. If they have to start shutting down and evacuate platforms, then it can have more of an effect on short-term oil prices. Now, unless there's a direct hit on those platforms and they would sustain major damage, then it could be a longer-term hit. But so far, they're forecasting it to hit east of a lot of the platforms. What will cause capitulation? Nothing really causes capitulation, Mamma Mia. It's more that market internals favor, and for those reading ubiquity, it's like that cascading effect that there's not a lot of stability. So when there's not a lot of stability, the market can favor more significant push down moves that essentially flush out everybody, and then people looking for more significant bottoms, or, hey, this has been overdone. Statistically, we could hit a multi-standard deviation move. This is algos will step in. It's more that the environment favors a capitulation move. That's why capitulations are hard to predict, because there's nothing that's going to trigger it. It's an environment. It's like a minefield. Just because you're closing in on a minefield and trying to navigate through, you might never step on a mine. So you might be fine. But because you have the minefield there, you have the conditions that are right for something to blow up. But it doesn't mean it has to blow up. Technical analysis on the hurricane. Well, I've been watching the forecast all the weekend because you can get some decent plays. You got to watch it, but right now they're forecasting still. The last one I saw, I haven't watched in a couple hours because I was focused on doing a sector overview, but I'll be glancing again at it tonight. So that's your crude. Remember, natty gas triggered the double. Still, this is the key area, 650. Bitcoin gone to sleep this weekend, which it generally does. Interesting enough for those that are playing along at home, this is a double. So if we did start now, if we push lower and Bitcoin follows and turns this into a triple, fine. But if we get the rally move tomorrow, we get the key close. This would be a corrective move, not a long-term bottom. But you get a key daily close back above 19,950. you get the rally potentially back to 21.6. If this pushes down back below 18.5, off the table. We'll look at Tesla tomorrow. Dollar index. This since we're taking out key levels, next major target 114.13. That's from the major harmonic to this significant pausing bar high before the correction to the weekly rotation zone. All right. I think we've gone pretty close to an hour. I'm tired. Yep, that's when I'm Florida, Cuban, Cayman Islands. Yeah. And right now, oh boy. Oh boy. Is the time to buy NASDAQ or rally is coming like this? You're gonna have to rewatch it from the beginning. We're gonna get a defining. This next 24 hours is going to be very interesting. Ask me tomorrow. I've already laid out what I'm watching for. Where is not an official, from my perspective, buy signal yet. I gave you my front run and I gave you the daily. We could be setting up another pattern tonight if we retest the vicinity of Friday's lows. I cannot predict that. The market's not even open for an hour with the futures. Please, I appreciate people tuning in, but just asking, don't come in late and then just ask, is it a buy or a sell? Because I try to give the logic and the reasoning behind stuff, not just, oh, we got to buy. Anybody who does that, who's not explaining what they're doing, is a whole different story. So we're at a critical juncture, and that's where I'll leave it. You can rewatch from the beginning. Oh, I'm just letting everybody know. You don't have to apologize. I'm just letting you know if you come in late, you're going to have to listen to the whole unfolding. Because the answer is not just as simple. Now, if we just had a already triggered double bottom pattern, it would be a simpler answer. Then I could say, yes, we triggered a double bottom here, but we have not. We only have potentials at this point. And I appreciate everybody being here. I just can't reiterate multiple times the same thing. You are welcome options. We will have a even clearer picture. I mean, I'd love to come on. I just don't have the energy to come on multiple live streams tonight. If I had infinite energy, I probably would, but then I'd be burned out. We will have much more clarity probably tomorrow morning, so please tune in tomorrow, 8 Central. Again, if you'd like to support the channel and the teaching, especially the teaching I do, please consider donating to the channel. It really does help it out. And it just helps me just not waste my time. With that, everybody have a great evening. And I will see you all tomorrow. Thank you for tuning in. Bye for now.